In this presentation, we're going to be taking a look at the forms within the customer section of QuickBooks Online. We're going to be considering the invoice, focusing in on the invoice. Here we are in Craig's Design and Landscaping. Remember, this is the test drive file, which you can search in your favorite browser by saying QuickBooks Online Test Drive and get to this free resource. In a prior presentation, we took a look at the QuickBooks desktop to consider the flowchart. So here's going to be the desktop. Here's the customer section. We looked at this flowchart. Now what we want to do is take each of these individual forms and see if we can find them on the QuickBooks Online. Take a look at what the format will be, what the data input will be for them, and what will be the impact of those forms on the financial statement. We're going to start off with the invoice. So you'll recall in the flowchart that the invoice is what we're going to do when we are billing the client. So we're billing the client. This typically will happen when we do work before we get paid. Something like a law firm or something like that. We did the work. Now we're going to invoice the client. We expect to receive payment in the mail at some future point in time. Here we are in QuickBooks Online. Now there's a couple different ways we can get there. Most of the times, however, when you're going to be doing data input, the fastest way to get there is to go to this new button. So within the new button, you see the customer section. The customer section has that kind of the information that we saw in basically the customer section on the flowchart in the QuickBooks desktop version. Number one in the customer section is, of course, our invoice. Let's take a look at our invoice. We're going to see a new invoice here. Now I'm going to go through here and actually make an invoice. Now when you make an invoice into the test drive file, it'll be there when you first make it, but then when you log back out and you go back into it, obviously it will be gone. But it's a nice tool to have to practice with. So the data input for basically an invoice is we're typically going to have a customer. I'm going to set up a customer, Amy's Bird Sanctuary. Notice as we tab through this that it populated some of the fields for us. That's because the customer had already been set up. So that's one thing we want to understand and know. How would we set up the customer that would then be used to create the invoice? We'll talk about that at a later time. But you'll see the billing has been set up. The terms are going to be when we expect to be paid. So we're going to send out an invoice. We expect to be paid within the 30-day time period in this case. Invoice date is as of today, 12/30. 2019, the due date then 30 days later, January 29th. So then I'm going to go down to the product and service information. The product and service information, and I'm going to pick a product and service. Now, once again, note the product and service items have already been set up here. We already have the product and service items down below. That's something we're going to have to set up. We'll talk about how to set that up later. If these are set up properly, the creation of the invoice is very easy to do. We don't need to know much about the QuickBooks system to make the invoice, and that's how we want it to be. To do that, we'll have to set these items up later, and that's what we'll do at a later time. So just be aware of that. So then we have the quantity and the amount. So it's going to give us the product service, the description, the quantity, and the rate of the product or service. Also note that we have the sales tax that's been calculated down below. Now I'm going to change this just to adjust it a bit. I'm going to put it up to 1,000 here, and just so we can see a significant number. So we have the $1,000 here, and then we have the sales tax that's going to be calculated, and we're going to have to deal with the sales tax as well. Now remember, when we think about what's the transaction related to this journal entry, we said it's going to look something like this. The accounts receivable, the account representing people owing us, is going to go up. Revenue is going to go up. And then if we sell inventory, as we're doing here, inventory will go down and the cost of goods sold expense will go up. Let's take a look at that. I'm going to actually change the date up top and put this in 2020. So I'm going to make it 01/01/20, so January 1st, 2020. So that's the year that it'll be in when we generate the reports. So when you think of an invoice, then in other words, the invoice itself, when you think about the journal entries or the accounts affected, invoice means accounts receivable is going to go up. That's what the invoice means. The accounts receivable is going to go up by the full amount owed to us to $1,080. And then we're going to say that the revenue is going to go up, the revenue or income or sales, but it's only going to go up by 1,000 because that's how much we get. The difference is what the sales tax is that's owed. That's actually going to go to a payable account. That's going to be a liability that's going to increase. And if we have inventory, then the inventory is going to go down, not by any number on the invoice, but the QuickBooks knows what it is by the item. It's going to decrease because of the item that we'll put in. We'll discuss that more later. and the cost of goods sold will go up by the cost of the inventory. Let's go ahead and record that and see if we can see this in the financial statement. So I'm going to go ahead and save this. So I'm going to say save it down below. Then I'm going to close this out. And now we're going to take a look at our financial statement. So I'm going to go down to the reports down below. So we're going to open up our reports. We'll do some more navigation on the reports later, but the main two reports you want to get used to is going to be the balance sheet and the profit and loss. Typically, they're going to be in the favorite reports because these are basically the financial statements. Everything else is usually going to be some kind of format or subset or more detail with relation to them. So I'm going to go ahead and open the balance sheet. So I'm going to open the balance sheet. I'm going to scroll up top. I'm going to change the dates to 2020. So I'm going to say 01/01/20 to 12/31/20. You may not need to do this in your set, but I'm going to say save that. And then we're going to run the report every time we change the dates on it. So I'm going to run the report. Now it's been updated. Now what I'd like to do is have the income statement open at the same time. So what I'm going to do is duplicate the tab here. I'm going to make another tab up top, and so I can have both the balance sheet and income statement open. So I'm going to right click the tab up top, right click on it, and I'm going to duplicate it. So let's duplicate that tab. And so now we've duplicated the tab and it's labeled balance sheet up top, which is nice. So I'm going to make this a little bit larger now. I'm scrolling up, I'm zooming in on the screen so we could see it a bit more. So now it's a bit larger. I'm holding down Control and using the scroll arrow to do that. Now I'm going to go back to the first tab, and then let's take a look at the income statement. So I'm going to go down to the reports down below. Again, I'm zoomed into the screen, so your screen might look a little bit different, but I'm looking at the income statement, which QuickBooks calls the profit and loss report. So you just got to kind of get used to it. It's going to be called the profit and loss report. And it looks like this. So I'm going to scroll back up top, change the dates from 01/01/20 to 12/31/20. So there we have that. I'm going to run that report. So there we have it. And then I'm going to copy this screen too, because I would like to have it up here named profit and loss. I'm going to duplicate this screen again. I'm on the tab up top, right clicking on it. I'm going to duplicate it. And so there we have it. And now it says profit and loss report. Now what I'm going to do is I'm going to grab this tab, I'm going to drag it to the right. So I'm going to grab this tab, left click on it, I'm going to drag it to the right, and therefore I have the balance sheet first and then the profit and loss. That's how I would typically look at them. I'm then going to go back to the balance sheet and let's say, all right, let's see if we can think about what this invoice is actually doing. So I'm going to say, all right, we created an invoice. One, the accounts receivable is going to be increasing. So I know the accounts receivable should go up. That's going to be this account. I can drill down on that account, which is kind of like auditing, right? I can go from the end result back, and I would always practice doing this. I'm going to select this account and say, okay, can I see the invoice that we just made? And here it is. I'm going to minimize the screen a little bit so we can see it a little bit more clearly. So here's the 1120 for the invoice. Notice the transaction type is an invoice, and then we have the name, and it's the split. The other side's going to sales. It's for the full amount of 1,080. If I then go into it, if I click on it, say, all right, what does that consist of? That actually takes me to the invoice, which is at that 1,080. Remember that 1,080 is both the sales price and includes the sales tax in this case. We'll talk more about sales tax later. I'm going to close this back out and say, let's close that back out. And then go back to our, I'm scrolling all the way to the right, and the way to get back, I'm in the transaction report. Now I'm going to go back to the report summary. So I'm going to go back to the report summary, and that's going to take us back to our balance sheet report. Now the other side we consider is on the income statement typically, which QuickBooks called the profit and loss. Let's go to the profit and loss report, and then I'm going to scroll down and say the other side went to sales. So here's sales or income on the profit and loss report. There's the 1,000. Let's open up that 1,000 and see what happens there. There is once again our invoice and the type of transaction. Notice that's the form that QuickBooks uses. It calls it a form invoice. We're going to go to the right. There's our amount. However, it's only 1,000, not the 1,080. Clicking on that 1,000, it'll take us back to the invoice. And you'll note the 1,000 is what we charged, not including the sales tax. So where did the sales tax go? The sales tax, let's take a look at the sales tax. I'm going to close this back out. Say, all right, well, what happened to the sales tax? I'm going to go back to the right, scrolling up. I'm going to go back to our report summary. That's something that we don't get to keep. We have to pay to the state. So that means it's going to be back on the balance sheet as a liability. I'm going to go back to the balance sheet. Going to scroll back down and we're going to look for the liabilities now. So liabilities, we're looking for sales tax payable, which QuickBooks has here as the Board of Equalization Payable. So we're going to go into the Board of Equalization Payable. That's who we pay the sales tax to. And then we've got our invoice once again. There's our invoice. If I scroll to the right, there's our $80 from the invoice. If I click on that $80 or any section within this line, we'll get back to our invoice. So there's our invoice. There's the $80 for the sales tax on it. Now, you would think that would be it, and that's complicated enough, right? But if we sold inventory, then it's also going to have to track the inventory should be going down. Now, the inventory is not going to be going down by any amount that's on this form because it's going to be driven by the item, and it's going to be a small number because you'll remember that I increased this to 1,000 from what it originally was. But that's going to be the other side of things. So I'm going to close this back out and say, all right, can the invoice record inventory even though it's not on the invoice? It can. Let's go take a look at that. I'm going to scroll back up. We're going to go to back to the report. And so now let's think about the balance sheet and say, inventory. We sold something that QuickBooks is tracking as an inventory asset. Here's the inventory assets. Let's go ahead and click on that item and see if we see the detail. Here is our detail. Here's our invoice. I'm going to scroll to the right. It's the same invoice. If I scroll to the right, then we have this $10, which is very small. And if I click on it, I'll go to that same invoice where I'm going to say, I don't even see $10 anywhere on here. Why? Because we don't want to tell the client who we sent this invoice to what the cost was. However, we do want the form to drive the calculation or the recording of the decreasing of inventory and the related cost of goods sold. We'll talk about how to do that. That's going to be done with items. So we'll set up the items later in that format. If you don't have inventory, then you're kind of lucky. You don't have to deal with that as much. It's an easier process. Going to close this back out, and I'm going to go back up top again. So we're going to go back up top, and I'm going to go back to the report summary. Then the other side of that is going to be on the profit and loss report. So I'm going to go back to the profit and loss report, and then we're going to say that's going to be going to the cost of goods sold. There's the $10 right there. If I click back on that, we go into the invoice for the cost of goods sold. So I'm going to scroll to the right and go on the cost of goods sold item. And there we have the invoice. And again, the $10, of course, isn't on it. So notice there's a lot happening with just basically this one invoice. And in order to make all that happen properly, we've got to set up the items correctly so that we have the correct cost. It's going to track the inventory correctly. And then we just basically need to know what the data input is going to do when you record an invoice. And if you just practice recording invoices multiple times, then you'll be able to understand what accounts are affected. Now note that in order to make the invoice, to do the data input, to just fill in the invoice, not difficult. That's pretty easy to do. The difficult part is knowing how to set up the system so that the invoice data input will do what it's supposed to do, and then understanding the effect on the financial statements so that you can basically interpret the financial statements when you look at those reports. Now, next time we're going to be continuing on in our flowchart. We looked at the invoice. The next step, of course, would be to receive the payment from the invoice that we have then created. We have created this time.